Alrighty. Welcome, everybody. Welcome. As usual, we're going to give about a minute or two just for people to start trickling in. Super excited over today's webinar, a very, very relevant topic. So let's just wait 1 or 2 minutes and then we'll go ahead and kick things off. And it's looking like a great turnout so far. We already have close to 60 participants. Why don't we do this? Why don't you let us know in the comments, who are you? Your job title, where exactly you're from, your name, and then also tell us, have you started your 2026 forecast yet? We are officially in Q4, so I'd love to hear where people are with their planning. And I'll do that as well. And we have lightly started our 2026 planning. We haven't really gone full force, but the clients that I'm working with certainly have begun thinking of that, as have the board of directors, as we're trying right now to first just make sure that Q4 is in line. So, a very relevant topic. Hey, Mark, great to see you over here. We have Lisa as well. Awesome. We have a lot of people from all over the world. We got Sonia from the UK. That's great. And of course, Dan, our co-host. Thanks for filling that out, Amy from Florida. All right. Well, why don't we start things off with a really fun game? We're going to do some true or false. True or false? Most companies' budgets are outdated within 60 days of actually creating that budget. Now, you're welcome if you want to put it in the chat what you think, true or false, but we're going to go through a bunch of them. So if you want to just think in your head what exactly this means, I'll go ahead and share my thoughts. Now, the key word here, of course, is most companies, because obviously every company is different. But to me, 60 days, definitely a lot can change within that period. Whether that's inside the company, whether it's the people who are working on the actual budget, the product line, the actual outcome of a lot of the assumptions, let alone what's happening in the world, external factors that could affect their business, interest rates, tariffs, and all sorts of other things can very much render your budget obsolete within as little as 60 days. So I'm going to mark that as true. Let's do a few more of these. The biggest reason budgets fail is because of a weak FP&A foundation. Now, this doesn't say weak Excel skills. This doesn't say the incorrect assumptions. It is a weak FP&A foundation. And to me, I again am going to say that this is true because it's not enough to be able to collect the relevant inputs that you need to put together your budget. You need to have a strong foundation with different people handling different roles in an efficient way, allowing you to collect inputs, validate those inputs, present those inputs, refresh that information each and every single month. The foundation, to me, is the most important part. And that's a huge part of today's session. Let's do 2 or 3 more of these. Department heads respond faster when you explain what is happening in plain English. Now, for those of you who have worked with department heads, departmental budgeting is another really common thing that we're going to be talking about in today's session, especially as companies mature past, let's say, 50 or 60 hires, and you need to have proper budgets built out. A lot of department owners don't know the typical things that you would find in an accounting and finance function. You take for granted that you, as a finance and accounting professional, understands what revenue is, how exactly that deviates from what sales are, especially under the accrual basis, and all sorts of other pieces that could easily overwhelm department heads. So I would certainly mark this as true, and I'm excited to go over some tips with our co-host on how exactly you could reduce that overwhelm with the department heads so you can collect those inputs and keep everyone up to date. All right, let's do 2 more of these over here. You should refresh your budget assumptions at least quarterly to stay relevant. Now, we said in as little as 60 days that your budget can become irrelevant. And again, it depends on the company. For a company that's very straightforward, maybe a services company, there's not a lot of churn in their clients, maybe they're not doing a ton of hiring, it could make sense to stick to that actual budget. But for most fast growing companies, things are changing so rapidly as you refresh each and every single month. The key is to constantly update that information and save down a new budget when necessary. And the majority of the clients that I work with who are early stage startups quarterly are always resetting their new budget to hold themselves accountable towards. And then finally, when your budget consistently misses by more than 20%, leadership stops trusting your forecast entirely. Now, you may think that this is true, and I think in most instances, if you're missing a lot of your key metrics within 20%, I could say that people are going to raise their eyebrows. But here's the key: it's okay if you miss your budget. It is not okay if you don't have a story explaining exactly what happened and why that happened. So, if 3 consecutive months you miss your budget because the sales team is not performing and you're working with the sales team and you're collecting those inputs and they're trying these different go to market strategies, but it's just not working at the conversion rates that they told you it would, well, that's not really on you. But if the CEO or the board of directors said, "Why did we miss our sales?" and you have no idea, that is absolutely on you. So, your job, your role as a finance and accounting professional is to connect the dots, to understand what is happening in each of those departments, to be the architect. You may not be the one who's creating all of those inputs. In fact, the best forecasts are collaborative, but you should be the one who owns everything that makes up that actual budget. And that's why I'm so excited about today's webinar. And it is such a timely webinar as we kick off Q4 and start to think about our 2026 planning. For those of you who have joined, you guys are the early birds here. You are developing the foundation that's going to make your 2026 planning a breeze. I'm a huge believer that the less amount of time that you have to complete something, the more stress, the more everyone is pointing the fingers. Right now, we're still in October. So take the information that we're going to be sharing today and learn how to develop that proper foundation for budgeting. Whether you're a single person in accounting and finance team, whether you have 20 people on your team and multiple departments or consolidations, we're going to be talking about all of that information. Because right now, I recognize that you're most likely getting hit in a ton of different directions. We are right now at the point of the year where it could easily be the busiest. Just think of everything that we have going on. Most likely, as usual, you have your CFO, if you are not the CFO, asking information, let alone your board of directors and maybe even your department heads asking for information. That's just the standard stuff that every single month you're dealing with. But on top of that, the interest rates right now, we just announced that they're going to be lowering. The economy is shifting, and that is having a macroeconomic impact. And the effect of tariffs and everything else that's happening in the world can very much change the impact of a company. And I saw this really firsthand. When interest rates went in the opposite direction, the higher the interest rates went, a lot of the early stage startups that we were working with had difficulty in raising additional capital for that working capital needs. A lot of them even went out of business. And this had nothing to do with what we were doing in our business. This is a complete macroeconomic factor that can very much affect your business as well. And on top of that, as we get into Q4, don't forget, we got to close out the year. Maybe you're going to be going through an audit soon, or maybe you just need to have all the information closed out. Typically, month-end closes are done each and every single month. But when you get to the end of the year, you really want to lock the books. You want to finalize things. You want to get the information to the tax preparer. You want to get it to your auditing department, to the board of directors, and all these different people. And I imagine many of the people joining us today are not strictly in FP&A. They may be controllers, or they may even be what I like to call a full stack finance and accounting professional, where you're working on the accounting side and the FP&A side. You understand how both pieces to the puzzle fit, which to me is one of the strongest ways to build an everlasting career. And with everything that we just mentioned, or even more fuel, more fire onto the flames over here. If your company is growing, you're introducing new product lines, hopefully you're shattering new records. Well, that, as exciting as it can be, creates a lot of chaos. It's new territory. It's things you may have never dealt with. It's decisions that need to be made very quickly, and it's different people who need to be kept in the loop. All of those things can be compounding, especially as we enter now Q4. Well, While the pressure is real, the timeline can be challenging. I've been there each and every single day working with these companies and my own company as well. My goal for today is, like I said, it's to give you that unfair advantage. It's to introduce you to concepts and foundations that you can start applying today to get ahead of the curve, to understand how to work with data in a way where you could easily transform it and not just cause redundancies by doing the same thing over and over. It's to work with different department heads, to know how to build those soft skills, to collect the inputs that you need, the information that'll allow you to build a defensible and credible budget. It's to allow you to have an easy time just focusing on your role and enjoying things as there is without just a ton of chaos. Now, a little bit about me for those of you who may not be familiar with me. I started my accounting firm, Mighty Digits, about 6.5 years ago. We're right now working with over 30 fast growing companies. And in my career, I've worked with easily over 100 financial models that I've built for these fast growing companies. I constantly am sitting in on board meetings with clients. I have the opportunity to work with department heads. I've seen pretty much every single business model out there. And it's one of my favorite parts about working in my job in consulting. I'm always introduced to new technologies, new business lines, new growth strategies and cultures and personalities from CEO and leadership. And because of that, that pushed me to start publishing content on my social media handle you may be familiar with right over here, your CFO guy. And funny story, when I started publishing content, it was really just another sales channel for Mighty Digits. I never would have dreamed that would have turned into this incredible community of over 450,000 finance and accounting professionals who regularly listen to the content that I have, whether it's on LinkedIn, whether it's via our newsletter, whether it's via YouTube and all the other social media channels. It truly is a blessing getting the opportunity to share my experience and also hear from you on your experience as well. And then lastly, our tool, Model Wiz, makes it really easy for you to manage the FP&A and budgeting process. It connects to your QuickBooks Online account. It generates beautiful dashboards that allows you to roll forward information by surgically inserting accounts and tons more. So the reason that I share all of this is because I've been in the trenches. I still am in the trenches each and every single day. And this is one of my favorite topics to talk about. But thankfully, I'm not alone in today's webinar. We have an amazing guest with an incredible company that I would love to introduce, and that is Dan. Dan, I'm going to turn it over to you, and you can give us a brief intro about yourself.
Thank you, Josh. Hi, everyone. I'm really glad to be here and to see people from all over the world joining us for what I think would be a very interesting webinar. Quickly, just about myself, I'm the CFO of ApprovalMax, and you'll hear more about ApprovalMax and our product shortly. By way of background, I'm an ex-lawyer, used to be a management consultant, did some time in VC and private equity, and for the last few years I've been a full-time finance professional. I've been the CFO and finance director of several tech companies over the last few years, and in parallel, I'm also on the board of quite a few. So I'm very familiar with the topic that we're discussing today from both the perspectives of the people who prepare the budgets, but also the people that evaluate, discuss, and hopefully also in the end also approve the budget. So very much looking forward to the discussion.
Awesome. And I'm excited to ask you about your experience, Dan, as we go through these slides, because we have a lot of really great information, and I'm looking forward to getting your perspective. So we're going to be talking about a number of things in today's session. Again, the overall topic is building the best possible 2026 forecast or budget, pro forma, whatever you want to call it. I know some people are diehard believers. Budgets need to be only a specific zero-based budget that you give over to department heads, and forecasts are ongoing. I hear all that. To me, they really are all the same, especially as you're planning for 2026. We're also going to be talking about how you can work with different department heads. Again, a crucial thing for any company above 50 employees. And if that doesn't apply to you, understanding these techniques will still be an incredible value for your career, both in terms of the soft skills that you can develop, the presentation skills, as well as the Excel skills. We're going to be having a deep look in Excel, specifically talking about how to consolidate information, whether that be with multiple entities that require that consolidation, or working with department heads and consolidating those intake forms. And I'm especially excited for that because I have gotten so many requests in my inbox from people asking me, how do you consolidate efficiently? And I've never covered this topic before, but I've done it tons of times for my clients. And I'm really excited to show you a number of different ways that you can as well. We'll also go over the budget versus actuals process, my favorite report in any FP&A function, and just in general, some best tips and practices. So with that being said, let's go ahead and kick off our 2026 forecast planning. And to me, before you really can develop this incredible forecast, I think of it like you're in a car. Before you can get to the destination, you need to define a number of things. One of them being the actual address. What is the route that you're going to take? How much time do you have to actually get to that point, which can maybe affect your route? But ultimately, my most important question that I always think of when I'm working with a client is, what is the intention behind this forecast? Because what many people may not realize is that you can have multiple versions of your forecast. A webinar that I just covered a few weeks ago, scenario planning, where one forecast goes to leadership, and that showcases where they may be vulnerable and what their targets are in a conservative manner. Another forecast may go to investors who are thinking about investing in the business, and you want to tell a very different story. You want to show, look at how amazing this growth is going to be and how we're going to penetrate this new market and we're going to just rocket ship all that. Hey, power to you. But keep in mind that management and the board of directors may be expecting something completely different, something a lot more grounded in reality. So Dan, I'm curious on your perspective, have you actually started your 2026 budget? And if so, which of these audiences do you focus on the most? Or maybe it's all of them.
We have definitely started. We're deep in the thick of it already. And yes, very time consuming, as I'm sure everyone understands and is familiar with. The short answer to your second question is all of the above. The approach that I typically adopt in situations like that is to build one comprehensive budget that can communicate the right level of detail to all of the different target audiences. And so sort of what ends up happening is different people look at different parts of the model. The reason I'm not particularly fond of having multiple versions is just it creates version control, and you have to update multiple files, and that's sometimes a recipe for mistakes that can be somewhat embarrassing. So you just build it at different levels of resolution, and you show the right audience the right level of resolution for them.
That makes sense to me. I like the approach of having a drop down where the different assumptions can edit. I guess that one follow-up question on that is, how do you manage the different messages? Again, going back to the idea of what I was saying, when you're raising capital from investors, you want to paint the picture the future is rosy, it's going to be incredible. I always like to think of board reporting as, hey, what are the lowest targets I could set that I could get away with so that ideally we exceed them rather than the opposite? So how do you juggle both of those in just one forecast?
No, you're absolutely right. And to clarify, if we were discussing a fundraising situation, I'd almost certainly have a separate investor-facing model that I would use for those purposes specifically. The other common application is for the commercial teams, sales and marketing. And what happens there is we don't typically build a full-blown comprehensive budget just for that, but there is an alternative version of the commercial side of things, so targets and goals, and that is something that typically they build, the leaders of the commercial function, so our CRO and CMO, build on top of the board-approved budget, which obviously includes much more ambitious targets for their teams.
It makes a ton of sense. Well, once we clarify the why and the who, now it's time to actually think about what areas of our budget need to be updated. Now, this isn't going to be a session on building a budget entirely from scratch, from the bottoms up. I have tons of other content on my YouTube channel and LinkedIn channel you can check out. This is taking the budget that you may have already created earlier this year or maybe even last year and thinking, what are the areas that I really need to update? And to me, it really comes down to these three areas. Number one, most important, is going to be your revenue. How exactly you're going to be able to ultimately generate cash from customers to sustain your operations without continuously raising capital. And that can be affected by assumptions that may be stale. Maybe the sales volume initially that you put in were too aggressive. Maybe they're even too conservative. It could also be impacted by new product lines, new features that you're adding to your SaaS tool, or new services that you're starting to actually consider adopting, or maybe you've already adopted as well. And maybe again, thinking back to what's happening in the macro economy, the idea that tariffs right now can affect shipping for e-commerce companies, CPG companies. This could be a really big impact. So the number one area that I see companies focus on first and foremost is the revenue build. And it makes sense because for those of you who are familiar with my 4 stages of forecasting framework, to me, a level 1 forecast is just a revenue build. And if you're an early stage company, oftentimes that's enough. Investors just want to know what's the actual business model. How are you going to generate the relevant returns? So focusing on your revenue build can be a great place to squeeze that juice in terms of preparing your 2026 budget by refreshing your assumptions. But when we talk about one side of the equation, the sales, we need to also now talk about the other side, the expenses. And 9.99999 times out of 10, the number one expense, the largest expense, the biggest and the most difficult to ultimately control is going to be your headcount expense. Now, I know we live in an environment, hire slow and fire fast, but at the end of the day, especially with Dan having a legal background, there are legal implications if you don't lay people off in the right way, with the right notice, with a potential severance package. So you need to be very careful about who you're bringing onto your team. And your headcount build is a huge area that you'll also want to refresh. Who's currently on the team? Who exactly do you want to hire? Under what circumstance would it make sense to bring this person in? At what rate? What exactly is our budget? When you already just have these two pieces in, that's pretty much the majority of your P&L. Sure, you have other expenses depending on the business that can also have a material impact, but the real strong foundation comes from these two areas. But as finance and accounting professionals, we know that the P&L is just one side of the business. You also have that other financial statement, the balance sheet, which arguably may be even more important than the P&L. It gives you context. It shows the values cumulatively. It shows how well leveraged you are. What are your liabilities, the owner's equity, the actual assets. And to me, the assumptions relying on the balance sheet can be capital expenditures that you can't put directly into your P&L. It could potentially involve debt that you're planning on raising and how exactly your cash out date is going to be impacted, again, if you're an early stage startup. It could also include other factors such as your receivables assumptions, your accounts payables assumptions, your deferred revenue. All of these items can affect your balance sheet. So, Dan, on your end, with your experience, which one of these is the most challenging and which one would you also say is the most important?
To start with, on the right-hand side, in our situation specifically as a software business, the CapEx is not really much of a consideration. And thankfully, we're in a good capital position. So fundraising and debt is also not something that we find ourselves having to deal too much with. I think the main two challenges that we're dealing with right now, for the first one you already mentioned, which is headcount. And in our case, it becomes even more complicated because we operate across 8 different entities in 8 different geographies. And when you have a conversation with a department head, they tell you, I want to hire this person in this month, fair enough. But then where are you going to hire this person? And they don't necessarily know. And the answer to that question determines their cost and determines their taxation and multiple other factors. So that adds a significant element of uncertainty that you have to figure out a way to deal with. The second, I think, and I don't exactly know which area to put this into, probably OpEx, but one thing that we're really struggling with right now because of the high level of uncertainty is, I think probably most software companies, we're putting a lot of effort into building AI into our product, into the core of our product. Now, this is all very new, right? So there's a lot of question marks around, how fast is this going to go? How much is it going to cost? What resources do we need? What's the time to market? What's the revenue impact? And at the end of the day, you have to put numbers behind that, because otherwise you can't put it in the budget. That, I think, specifically in this day and age, is a specific uncertainty factor that a lot of tech companies are going to find themselves dealing with.
Yeah, I think with how fast everything is moving with AI, it's like you blink and all of a sudden, like an entire industry can be transformed if you're not really keeping up to date. And I can really relate to that also with Model Wiz. I always dreamed of the ability to create a financial model with just one click. And it was so surreal, our ability to do that. But now it's not enough. I want to eliminate the human need for that one click. I want an AI to say, hey, I just reviewed your business, these 20 inputs. I got you. This is what we're going to do ourselves. And it's challenging. I believe that the potential is there, but like you said, it's an entirely new technology. So I could certainly relate to all of that. Well, you touched upon a number of really great points when it comes to OpEx, and that is, and what we've been alluding to so far, working with department heads. And to me, this really is the highest form of budgeting that you can do out there, because now you're not just a department that is working independently and is siloed and maybe is collecting inputs from the CEO or leadership. You're really working with other department heads now. And you're not only collecting the inputs from those department heads, but you're creating an environment where these department heads can actually understand what's happening in their department, so that when they see, oh, we're actually paying for these different software tools, these are the people who are on my team, this is maybe an allocation of how much spend I'm allowed in each of these different categories. Well, now you kind of create this like spider web effect where you're more of an architect rather than the one doing all the work. You're connecting the dots with each and every single person's inputs and being able to build a defensible, credible budget, so that when the variances come, which they always will come, instead of you having to answer all those questions, now you have a group of people, trusted confidence. You can go back and say, hey, you told me that we're going to be spending $20,000 this month on this conference, but I don't really see that coming through our P&L. What exactly happened? Oh, well, the conference actually got rescheduled. It's going to be actually in Q4, or maybe we're not going to it. And in order to work with these department heads, you first need to understand, how is your data being presented? Again, the same, garbage in and garbage out. If you're not able to actually point to, this is how much sales and marketing is spending on this category, this is how much R&D or customer support or G&A is spending, it can be very difficult then to collect new inputs because you don't really have that base. And I found that there are two structures in one's chart of accounts that can dictate how exactly you're tracking that. And I don't know if either of them is really better than the other, but this is what I typically see. A company either has a stacked P&L, where starting in OpEx, you'll have general administrative, you'll have all the costs, payroll, office expense, then general administrative section 1, so then the next section will be customer support. And again, then you have payroll, all the other costs, conferences, whatever. Next section, sales and marketing, and so forth. So you have this really long P&L, but each and every single transaction goes to one of these accounts, to one-to-one mapping. What may be more common, though I don't know if it's better, though it certainly is very popular, is introducing what's called a class. And the way a class works is you now introduce this new dimension to your financial reporting, where you'll still have the same P&L, you'll just have one payroll line item, one office expense line item, but you can now filter or showcase an alternative view where each department's value for that GL account is calculated. And the benefits of this is that you have now a really clean P&L, and you have a way to create these segments to work with these actual department heads to help them understand what's happening in the business. A challenge with this approach is it takes a lot more time, especially if you need to take one transaction and group it into a number of different departments because of this allocation. But it also becomes difficult finding the information, let's say with your accounts going vertically. When your classes go horizontally, well, then you really only have just one period over there. Because again, it's a new dimension that you're adding to your actual data. So I'm going to ask you in a second, Dan, about your experience and how you guys do departmental budgeting. But I want to just tackle one more thing here, and that's the process of how you work with these department heads. And again, when I say the term, as I mentioned earlier, being a full stack finance and accounting professional, it means you own the FP&A department, you know exactly what is happening, but more importantly, you have a really strong foundation also on the accounting side. Ideally, you know everything that is involved in preparing a month-end close, the cycle, the technologies that they're using, the process and schedule, and all of that information. When you have that foundation, you understand what's happening, it makes it really easy for you to then pull out reports, showcase to these department heads what exactly is happening, creating an intake form that allows them then to tell you what the future is ultimately going to look like. And going back to one of the very first points that we said in this webinar, don't make the mistake of assuming that these department heads understand all of this accounting and finance jargon. If you're working with the board of directors, these are institutional investors, most likely they understand a lot about finance and accounting. If you're working with leadership, most likely this isn't their first budget, so they do as well. But these department heads, they may have no idea, again, why this conference that we just spent money on, why is it sitting in this account called prepaid expenses? And it's your job to explain that in plain English. And the goal should be to develop a relationship with these people, both for the sake of creating a budget, but also these relationships can really follow you for the rest of your career. If you switch jobs or there are different opportunities or really just advice, anything, your network is easily the most powerful thing you could bring. So Dan, I'm going to ask you now, how exactly do you guys handle the departmental budgeting process? Do you guys use classes? Do you use a stacked P&L? And what other advice do you have?
So we use classes, or as we call them, tracking categories. So that additional dimension of basically allocating different pieces of spend across the chart of accounts. The reason we chose to do that is we didn't want to inflate our chart of accounts to something monstrous that's really difficult to manage. So that allows us to keep a relatively lean P&L structure. The challenge, of course, as you correctly pointed out, is translating accounting speak into the kind of jargon or terminology that different budget owners will understand. And many of them don't understand the chart of account if you just show it to them like that. And this is exactly where what you are calling intake forms, we just refer to them as templates, budget templates, come in. What we do is we create bespoke budget templates for each and every budget owner, which effectively take their part of the P&L and translate that into their activities in a language that they can understand and they can also feed into. And then we provide them these templates. We sit with them and explain to them how they should be filled out. And of course, we're there to answer any questions if they have. And it's a bit of an iterative process. And at the end of that, we get something that is filled in, ideally properly filled in, and then very easy to fold back into the P&L structure to create a comprehensive budget for the entire company for the next year. So it's really mediation job, translation job. I really liked your spiderweb analogy. It's exactly that, right? It's important to get the budget owners to really own their budgets and really take hold of them and not just, oh, you ask me questions, I'll give you answers, but it's your budget, you built it. No. It's all of our budgets and we own them and we're responsible for them.
I like that. I was working with a CFO once who mentioned there may be multiple stakeholders involved in the budgeting process, but there's ideally one owner to it. So you can be the architect, you can collect the information, but like you said, you really want to empower other people to own the actual metrics, especially when it comes time for explaining the variances. And there's one other note that I want to get to before we move to the next slide, and that is the challenges and vulnerabilities in working with department heads. Aside from the fact that it could be exhausting, you now have so much meetings that you need to have, collecting the information, explaining it, back and forth, revisions to the budget, that could all be challenging, and we'll talk about ways to do that efficiently. But don't forget, you are dealing with really sensitive information. Aside from how much money the company is making and what they're spending, the most sensitive information easily is how much each person is making. And don't make the mistake of assuming that the data that you're going to send that may be connected to a Google Sheet or a SharePoint file is safe because it doesn't show anyone else's salary. Because I made this mistake and it was so painful. I sent over the departmental request to the CTO. And what I didn't realize was that because I sent them a link on SharePoint, he was able, being a CTO, to go to version history and see the history of each and every person's salary. And it was terrible. I was so embarrassed. The CEO was so upset. And thankfully, there's still a client, but it was a lesson that thankfully I didn't have to learn a second time. So learn from my mistakes. If you're using something involving version control and history, make sure that no sensitive information is being shared there. But as Dan was talking about the process for collecting inputs from these stakeholders, and again, the idea that budgets most likely are not just going to be collected once. They're going to be refreshed every single month. You're going to want to analyze the information and send it back. To me, it's very similar now to this next topic that I'm excited to talk about, and that is with consolidation. Now, before I begin, I see that we have a few just questions and everything in the chat. There will be a recording that it's going to be shared. yes, we can share the slides with you as well. If you have any other questions, just put that in the Q&A. We're gonna have about 10 minutes at the end where we'll be able to go over that. But let's talk now about one of the trickiest parts in the budgeting process. Because if departmental budgeting is what I consider, an expert level, well, understanding how to also consolidate, now we're talking like black belt level over here. Because it's not just FP&A and accounting concepts, we're now blending data mastery, an understanding of how to work with data, transform and clean that data in a way that allows you to efficiently each and every single month update that information. And I'm excited because I'm going to share you a few Excel spreadsheets that I'll be sharing links for how you can get access to in just a moment. But the general idea, for those of you who aren't familiar with consolidation, generally, if you own a majority stake in a company, more than 50%, it is a requirement that you need to actually consolidate different financial statements. Now, most commonly, companies own 100% of some sort of subsidiary. That subsidiary, most of the time, is in a different geographic location. I've worked with a lot of clients who have a US subsidiary and a Canadian subsidiary, or maybe a European subsidiary. And there are a lot of factors at play for consolidation. Ultimately, what you're doing is the same as working with department heads. You're taking two data sets, you're combining them into one data set. And you want to create an environment where it becomes very easy for you then to edit that data set as each month's financials start to get produced for each of those entities, so that you can refresh similarly with the department heads and pull out that information. And there are two ways that I want to explain it. There really is a third way. I'm going to show you guys all three in just a moment. But in working with Excel, the number one finance and accounting tool, I'm sure everyone today has already touched a spreadsheet. There really are two of the most popular ways that you can consolidate information. The first is by using a simple mapping column and having a sum-ifs formula. So the idea is you have your P&L, you tag each and every GL account to a consolidated account. You then use the sum-ifs to join both of the data sets into one consolidated view. I'll show you guys how to do that in Excel in just a second, but I want to talk now about this other way, this tool that if you guys aren't familiar with, you absolutely need to get on easily. Hands down, everyone who is an expert in Excel will agree. The number one tool in Excel today is Power Query, allowing you to transform data, reshape it, everything in a way that you can just hit the refresh button. So the way that we're going to ultimately think about our consolidation, over here you see I have a P&L, and I have this mapping column. So this is what I was saying. You have a mapping column, and then you have a separate tab that you utilize with the sum-ifs to bring in the values from both of those mapping columns. Now, there certainly are implications for elimination entries that you need to think about. It can also get really complex if you're translating financial statements, because now you have to get the spot rate, the historical rate, the average exchange rate, which can be a little bit trickier. So at a high level, though, a sum-ifs is a really great way to consolidate, because you're just creating a consistent mapping between two data sets and bringing that into a consolidated view, as you see over here. The second method that I mentioned is with Power Query. And the idea is that you can load a data set into Power Query, and then one of my favorite features involves unpivoting data. Now, I'm curious if Mark over here loves Power Query. If anyone wants to tell me, have you heard of what unpivoting data is? My mind was really just blown when I learned about this process. See, most data, most P&L comes in a semi-structured format. By semi-structured, I mean accounts go vertically, dates go horizontally, the data then goes in that intersection, the matrix. This is a really easy way for humans to understand how to read something. But when you're programming, when you're feeding that into a machine, it becomes very challenging. When you unpivot that data, as you see over here, now you have a table where you have every metric for every single date and every single value. All the values go from top to bottom, and you're doing a simple sum-ifs to get your information in. Now, let me just share a really quick link over here with everyone in the chat. Can I get this here? Give me one sec, because I want to share this video before I forget. So the first video right here is going to be utilizing sum-ifs to consolidate. And then this second video is going to be utilizing Power Query as such. And there are templates that I'll be showing both of you, everyone over here, how to use in just a second. But there's one more way that you can consolidate information. And this is just one of the wildest things that I've seen in Excel. And that is utilizing Excel's data model. It is a tool called Power Pivot, where instead of you utilizing the sum ifs and combining information, you're actually creating relationships. And those relationships will allow you to then just point to each of the different tables, and you have this incredible dynamic way where you can showcase all of your consolidated data. And Salim over here mentioned that it doesn't work on Mac, and unfortunately, that is true. It really only works on Windows. But why don't I show you guys right now what this looks like in Excel so that you could at least get comfortable with a few of these different methods, starting with the sum ifs over here. So like I said, we have our P&L. This is exported from my accounting software. And we have this mapping column. All I'm doing over here in this tab, it's a sum ifs. Sum the values in January's column if the mapping column equals over here. And look at that. With one formula, I can just copy this down and to the right, and everything updates for my profit and loss and for my balance sheet. And if you guys want to connect this to your QuickBooks Online account, our tool Model Wiz makes that really easy. But this is one of the simplest ways that you consolidate. Again, you're just utilizing that sum ifs function, being careful for the elimination entries, ensuring that everything ultimately ties. Where it gets even more powerful is when you learn how to actually shape and transform that data. And with that, that is the Power Query video that I just shared you guys. And this may be the craziest thing I've ever built in Excel. It is what I like to call the world's greatest pivot table, where you can choose whatever period you want. You can choose whatever department you want to showcase the information. You can double click and see information on the transaction level. But it gets even crazier. You can compare values to different periods. You can even compare information to budget. And again, the idea is I created with the slicers over here. Ben, we already provided the links above. You could just scroll up and you'll see both of the links to those videos. The idea is that I have all these tables over here, and utilizing a combination of both Power Query and Power Pivot, I was able to make all this information easy to update. You just come in over here, you copy and paste your data for each and every single department or for each and every single entity, and all the information automatically updates. I'll share the links again in just a few moments when we get to the Q&A for those of you who are having difficulty finding it. But that to me is, again, the first time that I've ever shared information on how to consolidate. And while I can't go through all the details, the video that I mentioned covers all of it. And now for our final section, we're just going to talk about the most important part to me in the actual budgeting process, and that is the budget versus actuals. So let's go ahead and jump into that. And then we'll jump to a Q&A. So like we spoke about, your forecast is really only as good as the actuals that it compares against each month as you actualize. And if you're seeing really large variances, that should be a signal that you need to do a deeper dive. And I really can't stress this enough, what I said earlier. You don't need zero variances, but you do need a story on what happened and why it happened. In fact, I'll even say it the other way around. If something had a zero variance, make sure that it's not a false positive. Make sure that the information for your inputs of what made that account go up and what made it go down are in line. Maybe you were completely wrong and they canceled out each other. So this is really your opportunity to own what is happening, to control that narrative, to do that financial storytelling. In all the department, in all of the board director meetings that I sit in, the number one time on the finance and accounting function that we spend, the number one subject is always on budget versus actuals. Sure, we'll talk a little bit about projections or maybe what happened, but how that compares against what the board signed off on is a huge thing that I myself am held accountable towards. So Dan, again, someone who's done this for a bunch of companies and has been on both sides, how do you manage this budget versus actuals process?
I agree with you that it is a very, very critical process and you need to get it right. And to me, it's important to sort of instill this in the operating procedure of the business from day one. At Approval Max, we do this on a monthly regular basis. We have a very nice piece of software that helps us do that, which combines very nicely on top of our GL. And this is done at multiple levels. I mean, within the management team, we review results and I generally report this on a monthly basis and flag where are the major variances, and we dig into why those variances happen. And yes, I agree with you, there are always variances, but some are big, some are small. The small ones, you can pretty much say, yeah, we got it right, pretty much. So, 1%, 2%, nobody cares. And then, of course, that lays the sort of backdrop for the discussion at the board, which does always happen and does take up quite a lot of time on that topic. But then we make sure that we come prepared for that conversation because we've already had it internally and we all know why were there variances, what were the reasons, and what are we doing about it. And so we're all aligned.
And this is really your opportunity, A, to get FaceTime with some potentially really impressive people. If you're investing millions of dollars into a company, odds are you have a pretty decent sized net worth and you've done some really impressive things in your career. It also gives you the opportunity to really build your financial storytelling skills, right? Because you could understand everything about the business, you could have the most incredible Excel formulas, but if it only lies here and people kind of get sleepy whenever you talk or they just don't understand what you're saying, well, then what good is it? So,
Yeah.
so much can be said about budget versus actuals. Again, a whole separate webinar we could do. But let's just wrap up lastly with what exactly are the biggest takeaways, the biggest tips from today's session in working with your 2026 budget. Number one for me is what I mentioned. Again, anytime that I'm preparing for a board meeting, it is incredibly stressful if within 48 hours we're still making changes to things. And yes, it is on you to set these deadlines and to prevent that from happening. Sometimes you just can't control it. But if you're proactive, you're setting an actual calendar. I want this done a minimum of 2 weeks before, ideally 4 weeks beforehand. You're following up with people. Where is this information? I haven't collected this yet. Do you want to hop on another meeting? When you're proactive and try to give yourself enough of a buffer, I can promise you things will be so much less stressful than the other way around. Similarly, like I said earlier, take this as an opportunity, not just to think about finance and accounting. This is your entire career. This is your opportunity to meet with management, department heads, investors, the board of directors, all people who are pretty much at the very top of the organization. You may be just like a staff FP&A or accountant or a senior accountant. This is your opportunity to really build relationships with some incredible people who you can carry with you for the rest of your career. Don't stay siloed. Don't just take the information, collecting it over email. Build a relationship with these people. It'll be the largest dividend that you could ultimately return for yourself. And then lastly, like we've been saying the whole time, don't worry about getting it perfect. Each and every single budget I've learned something from, whether it's an Excel error that I made, whether it was a mistake where I forgot to collect a certain input, or maybe something changed. Take each learning experience, constantly iterate, and get better at what you're doing each and every single time. So Dan, before we just talk a little bit about Approval Max and then go over some Q&A, are there any other tips and best practices that you have?
I'd add, first of all, I agree with everything you said. I'd add a couple. One is, I've always found it incredibly helpful to start at the very top and align expectations with the board or with the primary investors, if you have them. Because otherwise you're kind of working in a black box and you don't know what their expectations are, and you come up with something that you think is amazing and awesome and you present it to them and they, pardon my French, puke all over it. They send you back to the drawing board and say, no, this is not acceptable. This is not the growth we wanted. This is not the margins we wanted. So getting that, steer early on gives you guardrails and it gives you certainty. So I understand the realms of the possible. And within that, I need to figure out how to create the plan. The other point I would make is just to iterate a little bit on a point you made earlier. I think it was Eisenhower that said it, that plans are worthless. Planning is essential. The point of this process is not the outcome. It's not the plan that results, because that will be wrong on the very next day. The point is the planning that goes into it, the thinking, the bottom-up analysis and thinking and consideration of every part of the business. It gives you a really strong and powerful tool to understand your business better and then adapt and improvise and change the plan as reality happens around you, but it really allows you to be in control rather than reactive.
I love it. And I really have to say, of all the different areas of finance and accounting, whether it's controllership, whether it's treasury, whether it's forensics or corporate finance, I think FP&A is the most exciting. You're really just you're predicting the future. You're working with amazing people. You're developing these really complex architectural things, and it's so much fun. And I hope everyone just goes out there and crushes it. Before we go over to that Q&A, I'd love for you to tell us a little bit, Dan, about Approval Max and how you guys ultimately make potentially even the budgeting process easier with proper data.
Sure, happy to. I don't want to bore anyone to death with too much detail, but at a high level, look, our solution is, I would say, the strongest solution I know in the accounts payable space to basically make sure that you are on top of what gets approved and paid correctly. And as part of that is an incredibly powerful tool to make sure that what you spend is tied to your budget. Because at the end of the day, it's very easy to use our product, which is extremely user-friendly, to make sure that every piece of spend that comes into the organization is linked to a specific budget line. And so you don't ever have to find yourself chasing after the fact to say, okay, who have we paid? How much have we paid? Which part of the budget does that relate to? And are we on budget or off budget? It happens in real time and everything is synced and linked. And so that gives you a very high degree of certainty and a very, very strong level of control over spend. And so you know that you're never going off piste. Irrespectively, it also gives you a very robust and I would say deep audit trail to be able to then show later on in hindsight, whether you're audited or not, or even to your board, exactly what happened, what you spent on, who approved it, what did it go for, and so on. So very much a very powerful tool to maintain control and increase efficiency and reduce risk across the business.
I love it, Dan. And a huge thanks to you guys for co-hosting this and sponsoring this webinar. That's what allows us to put together all this amazing content entirely free for everyone in the audience. So thank you so much. And now my favorite part of every webinar, and that's going to be us going into the questions. So I see we have a bunch of questions. Let's utilize the Q&A feature. I see a few questions that came through outside of the Q&A. If we could just put that in the Q&A, that'll be the easiest. So the easiest question for me to answer is, do you have slides or handouts to share afterwards along with the reporting? Yes, those will be shared right afterwards via email. All right, let's go over a few other questions here. So Silver says, I want to know, how do we present our forecast uncertainty to top leaders, like ranges or scenario outcomes, so that they can make sound decisions? So I'll go ahead and share my thoughts on that, and then Dan, I'd love to hear yours. Look, every forecast is going to have uncertainty, and there are things that are just impossible to actually predict. Scenario planning is a really powerful way that you can control and prepare for all these different circumstances. What I like to do is, like Dan alluded to earlier, I like to have a drop down where I can choose a different scenario in my Excel file, one of them being a floor where nothing goes well at all, one of them being a ceiling where everything goes well, and the other one being a base, which is what is the most realistic. And it's important for you to work with management so that they understand each of those scenarios, because while it's great to present the ceiling case to investors, you need to make sure that the company is prepared. If things go absolutely terrible, which majority of the time, honestly, let's be honest, it can, you need to make sure that they're prepared, that they have a plan for dealing with that. Dan, do you have anything to add to that?
Yeah, very briefly. I think that there's a fine balance to be struck between presenting multiple variations of what the reality could look like going forward and confusing decision makers. In my experience, boards often don't react too well to if you present them with too many scenarios. So I think part of the trick here is to have a preliminary conversation with those decision makers, the board, the management, whoever it is, and figure out what they see as the main points of uncertainty and then build scenarios around those points. Because otherwise, you get into permutations of permutations, and you get so many scenarios that you just get lost in the noise, right? So just keep it to what they think are the main drivers that you need to focus on.
I love it. All right, let's go over a few other questions. So Patricia asks, what about using ChatGPT for the consolidation? Now, again, things are changing so quickly. I haven't really found ChatGPT to be able to reliably ingest Excel data in any sort of structure and format, manipulate it and send it back to you. I know that it says it can do it, and every day it seems like another headline says that ChatGPT just killed Excel. I found that this is an area that it's still trying to catch up to. I wouldn't be surprised if it eventually does catch up to it. To me, I utilize ChatGPT all the time, as well as a bunch of other LLMs, and I use it more in a way of understanding the how and maybe the repetitive, really quick, easy things I can get from ChatGPT. I would instead use it as a buddy to help you with the consolidation. I just don't think it's there yet to allow you to consolidate, but that's me. I don't know if you've seen otherwise, Dan.
No, the ChatGPT and AI generally are super powerful, but mostly for analysis, not so much for structuring. They still get it wrong, and you have to do so much QA that at the end of the day, it's just simpler to build it yourself. So in terms of analysis, I think they're super powerful, and I would very much recommend people use them. But I agree with you that they're not where they need to be in terms of actually building stuff.
Awesome. And in case anyone missed the actual YouTube links for both of the budget files, you can find those both in the chat. I just posted them as such. All right, let's go over a few other questions. So Olayemi asks, can you explain the class stack and how it relates to call center dimension mapping? So the easiest way to think about it is as such. Typically, a financial report has the accounts going vertically, the dates going horizontally, and the data right in the middle. What the class stack does is it allows you to add a filter where what you see will now be populated just for one department or one function or location. You can also change the horizontal stack so that you see classes horizontally and the values for each class, but you then can't toggle on different time periods. So the way it works is every transaction gets coded or tagged to an actual class, which is what creates that additional dimension on the actual class feature. So hopefully that answers it. Let's see what other questions we got. Bart asks, how do you deal with intercompany eliminations? Dan, have you guys ever dealt with consolidations and intercompany eliminations?
Well, we're just starting to, because we've recently expanded from 2 entities to 8. So I'm going to table that response, if you don't mind, to the next time we do this webinar. And hopefully by then I'll have a lot more experience.
Sure. Well, in my experience, generally, anytime money is transferred between one entity to another, it doesn't go through your P&L. There may be some sort of management fee that one charges the other, but that's not what I'm talking about here. When you transfer money from one entity to another, that is a balance sheet item. And typically, the way you would classify that is due to, from, parent, or subsidiary. And the idea is that both of these accounts on both companies really need to stay at that same value, right? Because if you transfer 10,000 from company A to company B will have a liability for 10,000. Company A will have a receivable for that 10,000. Which means when you then consolidate, what you're in essence doing, I personally remove the mapping on my sum ifs function so that I don't have that amount in my assets, but I also don't have it in my liabilities, so that the two actually equal each other. And now the information will stack on top of each other, canceling each other out. So that's just like a very basic way to explain it. There are all these other complications with doing consolidation with intercompany, but I hope, Bart, that ultimately helps you. All right, we got time for just about a few more questions. So let's see. How can we connect headcount forecasts to the company HR system? And any big mistakes that organizations are making while scaling rolling forecasts in a global context? Well, the first one is pretty easy to answer. What I like to do is I always like to create an import-export functionality, which means I go to my headcount tool, I import the transactions, or I import the actual report into my model. I now have a tab that looks exactly like that, because the more anything that I do to rearrange that information, unless I'm using Power Query, is going to be new work each month as I refresh. I then build my formulas on top of that, or I utilize Power Query to pull it into my model, so that each month, this is the key, I can go to my headcount software, bring in the actual data via a just simple copy and paste, and everything ultimately updates. I don't know, Dan, if you guys have a similar experience, or you mentioned you're using like a budgeted tool that maybe even do it for you.
No, I mean, the tool does exactly what you've described, but we also link it in a different way, which is every time a new position is opened by the HR function at Approval Max, they have to link it back to a specific budget. So they can't actually open and publish a position without linking it back to a pre-approved budget. And this way we close the loop and we know exactly if a person is hired, the costs of that associated with that person, exactly what they link back to in our budget.
Makes a ton of sense. And Silver, in terms of mistakes on a global context, it's a little bit broad, so tough for me to answer that one. But we are going to finish with this very last question. How to ensure that the inputs are standardized across all business units and subunits? SharePoint doesn't work well. Teams struggle on the alignment side. So to me, again, this comes down to really data cleaning. I would utilize a mapping column, like I shared, in the event that you have different accounts or different information. That mapping column is then what will allow you to standardize the information, whether you're consolidating or working with department heads. So that wraps up today's session. Thank you everyone for investing the time and joining. A huge thanks once again for Approval Max in co-hosting and sponsoring this webinar. I had so much fun and I would love to hear each of your stories on your 2026 budget. I want to hear you nailing your actual forecast and developing those relationships like we spoke about. So thanks again everyone for joining. We look forward to sending out the recording with the slides and we'll see you all at the next one. Take care.
Thank you very much.